Please note that information, advice, or guidance that you take from this video, along with analysis and predictions of the market, is not expert advice. Thus, you use and apply it at your own risk. We are not financial experts who deem themselves authorized financial advisors. We are only sharing content based on what we know and understand of the financial markets. Should you take this information and use it, and therefore find yourself in a position whereby you lose money when trading, we are not at fault. You are not to use this information as a final conclusion of whether you should buy or sell whatever instrument we are analyzing based on this video, but as trading insights, ideas that give clues of what the market is expected to do. We also expect you to do your own due diligence of analyzing the market fully and take profitable trading decisions before you invest your hard-earned money into the market. So now to start with, we are going to begin with fundamental analysis. Now, when it comes to fundamental analysis, we are not going to be focusing on detailed articles and every subject containing or pertaining to each and every news aspect that has to do with all the instruments that we are focusing on. Remember, based on the categories or based on the analysis that we are applying and doing on this particular video, we will be focused mainly on US30, NASDAQ, and gold. Right. This then narrows down our focus to analyzing specifically news that are in relation to the US dollar. And for this particular reason, we will not be analyzing just about everything. We are just going to be looking at the news and focusing on the main bigger news releases that are going to be having the main potential to affect the market this week. So our goal in terms of this fundamental analysis is to look at how the market is expected to do, or what are we expecting in the market on this particular week, right? So I'm gonna be using, of course, two calendars. The first one is from investing.com. Starting up on Wednesday, we have crude oil inventories, and then we have FOMC meeting minutes, right? Now, of course, in sharing information concerning these fundamentals, right, one thing that I want you guys to pay attention to is not all of these news have a heavy effect. And the most crucial thing to always understand when we are talking about news, or when we do financial analysis, or fundamental analysis, the main important thing is how the news affect the market. Now, there are news that affect the market immediately, that at the point when they are released, the market immediately reacts. Hence, it is crucial to know the direction of those news before those news are released. And then there are news that affect the market over time. You see the market reacting at a later point in time. It's still fundamentals having effect, but they are not as strong when the news are released at that particular moment, right? So according to my experience, in terms of most of these news, crude oil inventories are always released, but I barely see them have a major impact in the market. Likewise with FOMC meeting minutes, these are normally complicated because they are simply based on a speech. So it is your listening or paying attention of that particular speech that determines what you grab, and also that determines what the market is going to do for that particular day. So these two news releases on Wednesday, although they do have an effect, they don't have an immediate effect on the market. So they are not a cause for alarm. They are news to be followed in terms of knowing what is happening, so that you can know how to respond to the market as time goes on. And as the market moves, you will be able to detect the main direction of the market. right? Then we have Initial Jobless Claim, Philadelphia Fed Manufacturing Index, the S&P Global Manufacturing PMI, the S&P Global Services PMI for August, existing home sales. These are all for Thursday, right? These do have an effect, but it is very slight, especially the initial jobless claims. They do have an immediate effect on the market, and they have the ability to push the market either up or down depending on the news release. Now, the previous news release based on the stats that are here, along with the forecast of the news. The previous was 224K, which means the initial jobless claims were lesser than they are expected to be, because the current forecast says 227K. That means more jobless claims are expected to be reported this coming week, which is basically negative for the dollar. So what we are going to do is we're going to be following the job market or the employment market of the US or of the United States, in order to be able to understand how people were getting employed, whether jobs were getting created enough or not, and then we'll be able to know what to expect from this. But since this is basically the forecast, that basically tells us that what we should anticipate is the dollar will fall, right? So those are basically expected to be negative news, right? So these are the news that I think it is best to communicate and focus on, because I know they have an immediate effect on the market when news are released, right? The rest, yeah, they do have an effect, but not entirely, right? Or let me say, not immediately in a manner that actually influences the market immediately, that you should worry about a huge major spike that may happen in the market that shifts the market immediately, right? Now, coming to Friday, we have Chair Powell speaks. This one is also the same as the FOMC meeting minutes, because it is based on a speech, and it is only by the outcome of the speech that you know what to expect. So fundamentally, for this week, these are the news that which we're expecting. According to me, fundamentally, our focus on news can be determined by other outside factors like politics, what's happening in technology, and all of these other things. But in terms of US news, we are not expecting heavy hitters of news releases or news reports that will have a huge impact on the market that we should be afraid of. This gives us more room to actually be more comfortable in terms of applying our technical analysis. However, please do note it is still crucial for us to do our level best to focus a little bit on what's really happening in the news, what's happening in the US, and how are the things that we are doing. How are the instruments that we are trading performing, and how are they affected, right? Normally, whenever I'm looking for such news, I normally select these instruments over here. So normally just select US30, US500 if that's what I'm trading, and then news releases that are in line with that are gonna come forth, and then I'll be able to get a proper update, which is why sites like these are created. Now, the same applies to Forex Factory. Now, we use both of these calendars so that we know the depth of the news release. You get my point. You will find that sometimes a news release that is on Forex Factory is not there at investing.com, and vice versa. So that tells you how to actually see or whether to take the news releases seriously or not. Right. So in this manner, as you can see, the forecasts are basically the same. And in that manner, we know that unemployment claims, which are initial jobless claims this side, are what we should expect as a heavy mover of financial markets. This by far is what we should expect in terms of in terms of fundamental analysis this week. Now, coming to technical analysis, remember, based on our analysis, we are focusing on US30, NASDAQ 100, and gold, which is also XAUUSD, right? These are the ones that we are focusing on. So we're going to do a top-down analysis, starting with US30, going to NASDAQ, and then going down to gold. Right. Now, please remember, guys, that these are only my suggestions and ideas that are meant to give you a clue and an idea of basically, of course, how I personally analyze the market, and also how you or what you can expect from the market, also based on this analysis that I am doing right on your screen at this particular moment. Right. Now, it is worth noting that we are to do this technical analysis and link it a little bit here and there, or in everything directly with fundamental analysis, depending on the news that actually get released. Right. One major thing that I have really come to realize is that the news are always in line, or let me say the technicals are always in line with fundamentals and vice versa, because technicals are a true reflection of price. They are a true reflection of what is happening in the real world. Whether the market rises or falls, it's a true reflection of what is happening out there. That's why we actually do fundamentals. However, if you are a true fundamental analyst and fundamental trader who understands fundamentals, you will be able to realize what happens on this chart. And the same applies if you are a true analyst. Technically, you'll be able to see what happened before the news, how to enter, what you could have done. My point is, at some point, especially for me with my level of experience, I've been trading for over 5 years, by the way. So with my level of experience in the financial markets, I have come to the realization and discovery that most of the time, especially before news are released, everything is fully reflected on technicals. You will always see what the news are about to do and the direction they are about to take before the news are released, especially, let me say, in the last 5, 10, 15 minutes, you will always be able to detect what the market is about to do. And all you have to do is just basically to know what's happening and simply follow that. Right. Now, my way of trading, I use a smart money concept. I also use this with normal retail trading concepts such as support and resistance, trend lines, candlesticks, and all of these things. I use all of these things as a unit to give me confluences. Confluences are confirmations, guys. So I use all of these things as a way to give me confirmations of whether the market is moving in the direction that I expect or not. So doing our top-down analysis, as we get right onto it, I will be basically just analyzing the market and giving comments as I do all of this. At some point, I will also be zooming out so that I can be able to see clearly what the market is doing, and I will test out all of my tools in order to be able to understand what the market is doing at any given time. And then from this, we will be able to deduce the direction of the market and what the market is actually doing. Now, another thing that is crucial to understand is that Forex strategies differ. So every Forex strategy is important. No Forex strategy is worth undermining. So even if you are just using trend lines, as long as you know what you are doing and you understand what you are doing, don't let anyone look down on you. Don't look down on yourself. Don't look down on the knowledge that you have of the market. Stick to what you know, as long as it is working for you and it is giving you profit, where of course you are most likely focusing on a video like this just to actually develop more insights or gather insights of what to expect. That's what I'm here to do. Either way, I'm here to just give you or share insights with you of what the market is anticipated to do this week. All right, so as I draw all of these trend lines, we draw trend lines more than anything in order to connect them from two ends in order to actually solidify the third as a valid trend line. And this actually gives us an idea of what the market is actually doing at that point. So as you can see from the weekly chart, we have a few equal highs and a few equal diagonal highs and lows, which actually form trend lines. Equal highs horizontally give us what we call support and resistance. I want to make this clear once again. Let no one undermine your strategy, and don't let anyone look down on you or make you feel as though your way of analysis or the knowledge that you have of the market is useless. What they know is actually better. No, as long as it works, everyone has their way of analyzing the market. So you might look at the way you analyze the market and think that yours is better, or I would actually maybe at some point have the same perspective. But the goal of trading is nothing but profit. It is not the spectacularity of how we trade or how we analyze or even how beautiful the chart looks like, right? So we can see that from a weekly perspective, we have a few lows that actually we have a few highs and lows. Please note that I use MetaTrader 5, right? This is MetaTrader 5. I'm not using TradingView like most traders actually do. I am actually able to use it, but I'm more comfortable with MetaTrader 5. So yeah, we have a few lows that we have connected and a few highs that give us an idea of what the market is doing. Having zoomed out over there, you can see that the market has a potential to move to the upside, right? As we look at these connections from the left, we have one over here, right? Duplicating that, we have a few touches that actually give us confirmation that this is a market that is moving to the upside. So we can anticipate that even though the market can be moving in zigzags, falling up, rising, falling down, rising, in that order, we can anticipate that in the long run, we can expect the market to move to that level over here, right? So what this basically means is we are expecting the market to come and reach this level up here, right? So that's where we anticipate the market to actually come to. Now, what will give us confirmation that the market is coming up here? It's obviously the breakout. So we are expecting that every or any time from now, we should expect the market to break these highs. To show that the market will most likely or eventually break these highs, right? The market has been coming and testing these highs. The more the market tests a level, the more you should know that eventually it will break it. So once we break this level, retest, we should expect the market to move to the upside, and in that manner we are going to be looking for buys, right? So this is US30. Now moving on to the daily chart, we have equal highs over here as I have outlined on the weekly chart. The weekly chart gave us the direction that what we should expect of the market this week or in the near future is that the market is going to rise, right? So that basically tells us that we should be looking for buys in the near future. When we check this in line with news, we will also definitely most likely find that news releases are going to be positive for the dollar. And besides, always let me say, in most cases, we most likely anticipate that financial markets, or let me say US dollar markets, are most likely on the rise. Their falling is temporary, but in the long run, they are always rising. So we know that no matter what, US30 is going to be rising until it reaches the 50,000 level, and yeah, that's basically where we can say we're expecting and looking for buys. Now, because we have equal highs over here, as I can mark them with these arrows, we have approximately close to 4 touches which have been strong rejections, by the way, because they are on higher time frames, right? The higher the time frame, the stronger the level of rejection, right? So this basically tells us that as an overall longer direction, we are in anticipation that the market is definitely on the rise, right? Now, because we have established this as our direction of where the market is going to go in future, our goal is not only just to look for buys, because remember, as I said, the market moves in zigzags. So we are expecting that in as much as the market will be moving up and down, we know that in the long run or in the longer term, the market is definitely buying. So let's say maybe we would have spotted entries maybe down here or in some of these lows, right? We are going to mark them as we use trend lines as well. If we had spotted the market in and its entries in these levels, at this point we would still be holding our buy, let's say, especially if we spotted it down here, right? So coming to this week, we can say we're expecting the market to break this level and move to the upside. But because at the very same time, this is a strong level, this is a very strong level. The market has rejected at this point approximately 4 times. It is also possible for the market to go down. However, even as it goes down, my anticipation and full prediction of what the market would do this week is possibly a slight move to the downside and a major move to the upside, right? Just for this week. That's what I'm expecting the market to do, just basically based on the information that I have over here, right? So moving on to the 4-hour chart. If you look clearly on the 4-hour chart, the market closed above, right? The market closed above this strong rejection over here. That means structure has been broken, and that gives us a possibility of expecting that the market has broken structure, meaning a door to the upside is opened, right? But because, of course, there's liquidity, there are all of these things, normally, right, market makers, bigger financial institutions, and all of these contributors to financial markets push the market down, of course, to cut off a few stop losses and all of those kind of things, right? I'm sure you know about that, but if you do not, I'm sure as you learn more on how to trade, you will be able to get to understand what all of those things mean, right? So as we're talking about a rejection in the market, we have established that this is a strong level where the market has been rejecting from. Hence, if you were trading last week Friday, if I can go to the 1-hour chart, if you were trading last week Friday, you will understand that this was a historical day in the market because the market broke onto a new high. That level over here is a new high in the market, right? Now, that being a new high, that basically simply means that the market obviously was expected to fall from there, right? Now, that is something that I would most likely explain in a Forex course or something when I'm teaching someone. But right now, I'm analyzing, so my explanations in these things are fully minimal, right? So as we look at US30 going back to the 4-hour chart, definitely we are expecting that the market should rise on US30, right? Whereby actually for all of this month, which is the month of August, US30 has been rising from the beginning of the month, right? So our expectation is that this market should rise. However, in fact, as I look at this trend line, it does give us a little bit of a clue or an idea of the market rejecting up there and actually being the reason why the market went down. So if you were using this trend line and you were basically following that trend line, if you sold off up here, you would have been in profit and had a very profitable Friday, right? I wish I could do a day-to-day analysis, but that would be more like me giving away free signals, right? Which is free money. But maybe in future, right? Maybe in future as the time becomes more available. But if I can draw a trend line over here, as you can see, we have a link that tells us that the market can actually possibly come back down here. And as it comes back down, we can slightly expect that can be possibly the market's retracement before it moves to the upside. Remember, we established that the major direction of what the market is going to do or what we're anticipating the market to do is to the upside. And with that said, we are also understanding that because the market rejected here on Friday, remember, there is the smaller portions of the market's movements in smaller time frames that gives the larger direction of where the market is actually going in bigger time frames, right? So in a smaller time frame, like the 1 hour chart, I wouldn't be surprised to see the market coming back down here, right? Especially because we also have some liquidity going on. I wouldn't be surprised to see the market coming down in order to test some of these areas before it bounces back up and continues with the trend, right? So this is what I expect of US30. Remember, I'm not giving day-to-day analysis. I'm giving an overall scan of the market in terms of future direction, specifically this week. And I'll repeat, my anticipation of US30 is that this week it's basically going to be coming down slightly. If it doesn't, it's most likely going to be bouncing from here and just going up, right? But most likely, especially if it breaks any of these lows, if it breaks this low today and then breaks this one, then yeah, definitely it's going to be coming down and then change character and then continue to the upside. But my simplest point is, with US30, we are looking at long-term direction with a slight retracement and a bounce from here and move straight up. I can basically say the bounce, actually, I would most likely predict it to be happening somewhere around 44270, or slightly 44500, right? Somewhere there. Then if it is to come down, it will bounce around these areas and then continue to the upside to fulfill our long-term direction prediction into the 50,000 or 51,000 level. Coming to NASDAQ, we also have an uptrending market, as you can see, specifically for almost a huge section of, or let me say a huge part of this year. NASDAQ has basically been on the rise, right? So I'll do the very same thing, of course, draw trend lines. For me, trend lines help me gauge the direction easily and quickly, because this is the way I find it very easy to just see whether the market is moving to the upside or not. It's the quickest way, the fastest way, not so spectacular, maybe an old way of trading, but it's very easy and it helps you be able to detect what the market is doing and where the market might be going in the long term, right? So having drawn our trend lines, of course, we can see that the market is basically on an upward movement, and this is of course on the weekly chart. And if we can zoom in as well, I forgot to actually give you a little bit of an idea based on what we call candlestick analysis, because candlesticks are very good in being able to help us identify the weekly and the daily bias, right? A daily bias or a weekly bias is basically a weekly or daily projection that tells you where the market is going based on past information, right? So it tells you where the market can be expected to go in the near future, based on how the few candlesticks or that particular candlestick of the previous day actually is or was, right? So here, as we can see on the past week, we basically have a doji. A doji simply means indecision. So it's possible for the market to come down a little bit, but much more also go up. Now, of course, this is the second touch in terms of the weekly, unless if there is an older one that I have not actually spotted down here, but that would be actually much more far-fetched, and in a way it might actually bring us some confusion, right? But of course, we do have a high down here at this level that actually connects with this one, that might position that one over there as what we can call a rejection or an anticipation of a rejection, right? But I'm sure we have more clarity if we go to the daily chart, and that will basically give us more information of where and what we can expect the market to do. So what I'm going to be doing right now is basically to draw these trend lines and just in a way have or establish an idea of what the market can be expected to do in this next coming week. Okay, so having placed that trend line over there, we see two connections. The third one giving us an idea of the market rejecting at that particular level. Of course, as I can zoom in, as you can see, the market rejected over there, went down for a few days, but it is consolidating. We have a point of support over there. I'm sure if I zoom out into smaller time frames, we will have clarity on that level of support. And then in that manner, we will see what we can expect the market to do. But of course, much like US30, because US30 and NASDAQ actually correlate a little bit, they all consist of companies that are major market movers. So because that is the case, they have a strong correlation, even though US30 is more affected by US news and NASDAQ is more affected by technology-related news, right? Or technology-related companies as such. So when it comes to NASDAQ, like I actually showed you guys, as you can see, we have a few connections over there. So much like US30, actually, like I said, the rejection of this trend line over here is a clear sign of the market reaching a state where it can basically fall. Now, the fall doesn't actually have to last for too long, because of course, like I said, remember what I said when it comes to US30. I said I expect US30 to fall down first before it can go up. Now, when you look at NASDAQ, it clearly gives us a signal that gives us an anticipation that it may be going down just for the next few days and then bounce to the upside by the end of the week. So I can say Monday, Tuesday, expect the market to fall. Wednesday, expect the market to fall, forming a V-like kind of thing, right? Where it actually goes down, bounces, and then goes back up to end the day and then rises for the rest of the days, right? If not that, just expect the market to form something like that, but of course within the days of this week, right? That's what we are expecting. So as we can see, NASDAQ from last week rejected over there at the top, even based on this trend line that I've just drawn over there. NASDAQ rejected over there. Of course, as you can see, coming down to the 1 hour chart, it changed character. Of course, retested that range, broke structure, went back up again, came back down once again, broke that level of structure. Now it is actually going up because the market is open, right? It's actually going up once again. My expectation is that it's coming up here to reject and continue to the downside. So for the market to be continuing to the downside, we can expect that to happen for just quite a few days, as I stated, right? We can expect that to happen for a few days. In fact, even if I use this trend line over here, even though I'm just marking it with this crosshair, you can see that the breakout over there going down is a clear signal that the market for the next few days, right, or for basically even this week, it can still fall down for this week and start rising next week, right? But when it comes to NASDAQ, it has a clear indication of what the market is expected to do because it has rejected up here, and that is much more what I can call a clear solid rejection because the market has changed direction. Unless by any means you see the market changing structure to the upside during the week, then you know that from whatever particular point where the market has changed the structure from, it is doing a U-turn, right? It's basically moving in a different direction. But as far as I have drawn even these arrows, this is what I'm expecting what the market should do. Remember, as I draw these arrows, I'm not saying that's what the market is going to do. At the end of the day, as you analyze and as you trade, you are to allow the market to give you confirmations. Right? Let the market move and show you what it is doing. And then from all of these kind of things, that's where you get to devise what the market is trying to do, where the market is going, and what you can expect the market will do for the week. So when it comes to NASDAQ, my anticipation is that it will basically be going down for the week, bounce at any of these levels, and then go back up. Much like US30, just a different appearance of the market. Now, going to gold, I have not actually traded gold in a while, but from a glance, just by looking at gold for the past few weeks, it's basically been consolidating at these upward levels. I see a consolidation, a market that is just moving up and down. So that basically tells me that eventually we will, or we must expect a breakout. And our duty in this analysis is to find out the direction of that particular breakout. Now, gold, especially for the past few years, has basically been on the rise. As far as I see it, I still remember even the day when it broke to the 2000 level. This was way back, if I'm not mistaken. It reached the 2000 level in 2020. I still remember that part. That's one thing that I'm sure that I remember. It reached that level and then it fell back down. But as you can see, over the years 2020, 2021, 2022, 2023, 2024, now in 2025, it's still on the rise and moving stronger than ever, right? So it's really good and much more best to invest on gold if you are functioning as an investor. And I'm sure by now, much like Bitcoin, you would have definitely made a lot of money. You would have definitely made a lot of money. From the outside, the link of these trend lines is frequently broken because the market just keeps on rising. You know, it's been an uprising market for a very long time. And as far as I can say it, it's still going very, very, very strong, right? So what we are going to do, or what we are doing here, is basically just trying to find the direction of gold. Now, one trick that I really like to apply is always remember that the rising of the dollar causes gold to fall. The falling of the dollar causes gold to rise, right? They are opposites. We can still say they are opposites that attract, but I'm not sure if that applies to this case. But what I mean is that's basically one methodology that applies as a correlation between the dollar and gold, right? In general, that's just how the movement between these two particular valuable commodities or pairs, this is how the market moves in between them, right? Which I believe is the general way of how the market moves in general. So either way, getting right onto a deeper level of analysis of gold, as you can see, from the weekly, it just keeps on rising. So that tells us that, well, we are trading a market that has been on the rise, an uprising market that is consistently and continuously gaining value, right? And of course, connecting these support levels and levels that are highs. As you can see over here, we have three strong highs where the market has been constantly rejecting. Right, the market has been constantly rejecting, and like I said, we are seeing a consolidating market where the market has been consolidating and moving up and down in between these markets. Of course, I see a trend line over there. Looking at this trend line as a diagonal line of its own, positioned over there would obviously give you a direction that this point over here, as a point of rejection, is a point where you can enter a sell, right? If you sold over there based on this trend line, even just by that alone, most likely you would have been making money and holding for a few days, close to 1,000 pips over there, right? Now, as we look at gold, we can establish the fact that the market has been rejecting for the past few weeks, actually. Yeah, for over a month now, gold has been rejecting at these levels. It's been strongly rejecting at these levels, and those are very wonderful signals of selling. If you are seeing traders selling at any of these levels, you definitely would have surely made money, and I'm sure there are traders who have basically done that, right? So now, according to where gold is, right, our anticipation is obviously, or let me say, gold is giving us a signal that it is most likely to bounce from this level, right? There's liquidity over here. I see equal highs. In most cases, this being equal highs, gold can come down, right? Take that liquidity and bounce to the upside. Right, so my expectation of gold for this week, this is also conditional based on news, right? Remember, it's a consolidating market already. It's consolidating both up and down, and it is trading within this level a lot. It's moving in between just that level, right? Just these two levels, up here and down here, right? If I can also use it like this. It's just basically just trading in between these levels. So if you are trading in between here, buying here, closing over there, selling again, you are most likely quite safe, right? So in fact, with gold, because it has not even reached this level up here, it can still bounce from here and come back to and come up to that level over there, because here we have a confluence of a trend line as well. I'm not saying trend lines are always reliable, but remember, they are just a clue of direction, right? They are not always the best. The best way to really gauge the market accurately, right? The best way to accurately gauge market direction, right, is honestly market structure. The breaking of highs, the changing of character, all of these things are the best way to detect where the market is going. So as you can see, this is only a trend line. It does not mean the market will just bounce here because this is a strong trend line and then it moves up, right? The market can bounce here and we are sure it's going to be moving to the upside if we see change of character over there, right? If we see change of character in these levels, change of character to the upside, then we have affirmation that the market is actually on the up, is actually moving to the upside, right? But here the market is actually at some lows, right? And it's still going down to show that the pressure is towards selling, right? So if by any means the market does not bounce here and go back up after changing character, of course, where that will be our confirmation that the market is moving to the upside, right, then we are much more assured, definitely with no doubt, that the market is going to be breaking this level, retesting it, and continuing to fall to the downside, right? Where the continuation of falling is most likely to bounce here once again. But that is going to be our confirmation should the market break this level, right? If the market breaks this level over here, we are in anticipation that the market will be, right, coming down here. It will go down, if I can actually put it like this, go down, then bounce, come back to retest, and then shoot straight down. We are talking about if the market breaks this horizontal level here, which is a support and resistance level, and of course this trend line, which is a diagonal line moving across. If the market breaks this level, we're expecting sales starting even from today, right? But if not, we're expecting the market to bounce here, change character, and shoot straight to the upside, right? That's our market direction. But of course, like I said, and like I clearly outlined, gold is just basically trading in within this range. And if by any means we come out of this range, right, wherever we break out from, whether we break out from this level, that's our signal for the market going down. But if the market bounces here and comes back up, if it breaks that high, we are looking for more buys and just moving with the market, keeping on buying. All right, so that's it for this week. I hope you guys understand it, and I hope you guys have actually gotten everything and everything is clear to you guys. Remember, to do a quick recap, we are expecting that US30 should break these highs, right? Because the overall long-term direction of the market is to the upside, right? But of course, before the market breaks to the upside, we are expecting a bit of some retracement where the market is gathering momentum before it goes to the upside and then it breaks. So I expect the market to go down on US30 a little bit and then break to the upside. If it does not even go down much, don't be surprised. It's still possible it will break and then keep on moving. But as far as I know, the market, in most cases, it will gather momentum first. It gathers momentum by going down. Momentum is simply gathering power, if I can put it like that. Gathering the power to come back and strongly break through that level. Of course, all of that will be in line and also with confirmations of the news. The same thing applies to NASDAQ. As I did say, it has already broken structure. Over here, it was already broken structure. That break of structure where the market is now retracing to the upside gives us the confirmation that the market will reject from up there and keep on going down. It will obviously bounce at any of these levels. It will bounce there, just like I just said on gold. It will bounce there, give change of character, and that will be our confirmation of the market changing direction, and then we just keep on buying, moving to the upside in that manner. But for now, definitely expect sells on NASDAQ, right? Now, most likely, if you are expecting sales on NASDAQ, you should definitely expect sales on US30 at the same time, right? So my anticipation is that these two pairs will basically start by going down first, right? Unless stated otherwise. Remember, this is the market. We can analyze, we can do whatever, but it will still move on its own way, right? And of course, when it comes to gold, you get everything. It's either we break to the downside or bounce to the upside. With confirmations, of course, we will have direction of what the market is doing this week, right? With confirmations, of course, we will have direction of what the market is doing this week. So thank you so much, guys, for tuning in. I hope you have a very wonderful trading week. I'm going to be here. I'm going to be trading. Now, if by any means you need to talk to me, you need to be in contact with me. You have questions, you have suggestions. I wish maybe I could analyze more pairs because we trade different things, but I decided to just focus on these three because I know a lot of traders, especially in South Africa, are trading these. Well, let me just say globally, a lot of people are now trading these three pairs as it is right now. So of course, this is not a full detailed analysis to tell you what to buy or sell during the day as you are trading. It's simply a clue of what you can expect the market to be doing for the week, right? Where I'm just sharing my perspective of what the market is going to be doing. And of course, let's work, let's grow, let's make money in the forex markets. And yeah, of course, like I was saying, if by any means you need to be talking to me or you want to inquire, maybe you also want to learn how to trade, reach out. Of course, I'll leave my WhatsApp business contact on the description, and of course you can also follow me on other platforms. I don't share much of forex knowledge. This is actually my forex analysis video for the first time, right? But of course, if you get to watch this and you like it for this week, please note that I'm going to be releasing these videos every week on a Sunday, latest Monday if I delay to upload, but most likely, yeah, definitely on Sundays. I'm going to be sharing my perspective of what's going to be happening in the market based on these factors or based on these instruments that we are analyzing. I hope you guys have a good week. Thank you so much, and thank you for watching.